Are you an entrepreneur who's thinking, I really don't want to take any risk with my money. I just want to know what the safe investment options are? Then this video is for you. This week, we're going to be looking into 5 safe investment options to consider as an entrepreneur or simply as an investor. Now, of course, the number one, drum roll, is Treasury Bills, right? What could be safer than Treasury Bills? Treasury Bills are like your go-to if you want to think about safe investment options. Why are they considered safe? Because they are issued by the government, right? And to a large extent, the government does not default on its debt. Well, there are some governments that have defaulted on their debts, but typically not with Treasury Bills. Treasury Bills are short-term instruments. You can usually basically invest in them over a 90-day period, 91-day period, or 182-day period, or 365-day period, right? So it's short-term, it's issued by governments, minimal risk, very minimal, right? And it's also liquid. You can always liquidate, right? If you feel that you want to sell, there's basically an active secondary market for selling off your T-bills, right? If that's what you decide to do. And then I think the final point is just knowing that, right, there are options to get your interest upfront, right? So for instance, you can get paid so it's basically a discounted instrument where you are paid your interest upfront, and then at the end of the defined period, you get your the face value of the T-bill, right? So yeah, that's definitely a safe investment option to consider. Speak to your financial advisor, reach out to your asset management company and broker to find out how to invest in Treasury Bills, okay? The second option is what I call the fixed deposits. This basically works with a lot of financial institutions or fintech companies with their apps today. So you can, decide that you want to lock in your money into a vault or fixed deposit, right? And they give you an attractive interest rate to consider. Average rates are usually between 12 to 14%, depending on the option that you want, and also depending on the tenor of your investment. So you can do a 270-day, fixed deposit, or even a 91-day fixed deposit, for instance, or 1-year fixed deposit, right? And then for most of the fintech apps, you see them ask you to lock in your money into a vault for 12 months. That's basically how it works. But remember, the goal is you're fixing your money in a safe deposit option by a financial institution. Now, this is not issued by the government, unlike Treasury Bills, right? Treasury Bills are issued by governments, but fixed deposits are financial instruments by financial institutions or fintech companies on their apps, right? So that usually is what you should consider. That may bring a higher level of risk compared to Treasury Bills, but to a large extent, still low risk. Because most of them are probably investing in government securities anyway. But if what you have as your investment budget is not high enough to invest in Treasury Bills, then you should consider fixed deposit. But please speak to your financial advisor, right? They'll tell you the right option. So these options that I've shared are usually great when you want something short term, with low risk, and you can liquidate easily, and you just want to leave the money in a bank account. One thing your money should not be doing right now is sitting around doing nothing, right? Your money should be working, at least working in a safe investment instrument, all right? So T-bills and fixed deposits. The third option to consider, money market funds. Now, money market funds are great because basically what they do is they pool funds, and then they are professionally managed by professionals, right? And then they invest in different instruments that you probably don't have access to yourself. Now, different institutions have different kinds of money market funds. So money market funds invest solely in Treasury Bills, 100%. Some have a mix of money market securities, right? Some have a mix of commercial papers, T-bills, and some other short-term securities. But be clear that you read the fine print. What are the securities that they're investing in? And if it's a money market fund, then they should be investing only in money market securities, right? Now, today, money market funds, there are so many options. Most asset management companies have money market funds, right? And there are, lists that show you the best performing money market funds, to show you the money market funds that provide the best returns, or the best yield, or have the best performance. Because at the end of the day, yes, it is professionally managed, but it also depends on the skill of the manager, right? It depends on the skill of the fund manager, and some fund managers are just better skilled than some others, and you see that in the performance of the fund, right? So the best performing funds are usually listed, and I'll put it up on the screen here, so you can use that to make your decision. Now, this is not saying you have to invest your money with the best performing money market fund, because sometimes this performance indices might be for a short period and somebody else might emerge as the best performing market fund next period, right? So please make your decisions carefully. You need to consider different options, such as how long the asset management company has existed. Do you have a good account officer? Do you think their platforms and tools are user intuitive? Do you like their tech? Those are some of the things you should consider when you're making a decision on which money market mutual fund to invest in. The final option, of course, that is considered safe, but probably less safe than the other three options that I've shared. Bonds, right? Bonds, bonds, bonds. Bonds are a great way to go if you want to consider something more long-term, but still to a large extent minimal risk. Now you have municipal bonds, which are usually issued by states. For instance, Lagos State government issues bonds. You also have local government bonds, but not a lot in this part of the world. You might have a local government bond in your country. So municipal bonds are issued by state and local government, right? And then you also have your, what's it called, sovereign bond, or you can even call it a government bond, right? So a sovereign bond is basically issued by the government of that country. So the United States of America issues a bond, or Nigeria issues a bond, or Ghana issues a bond, or Uganda issues a bond. Like every country, most governments issue bonds because what they are doing is trying to borrow long term. That's what they're doing. So the money they want you to borrow, they want you to lend them money over a period of 30 years, 50 years. So they are bonds that provide that, right? So with a bond, it's usually more like moderate to risk because, like I said, there are governments that have defaulted on their bonds, right? So you have to be very careful how you decide on what bond to invest in. And there are corporate bonds as well, right? So municipal bonds, government bonds or sovereign bonds, and there are corporate bonds. Corporate bonds are usually issued by not financial institutions, by multinational institutions or just institutions, right? Or conglomerates or companies that want to borrow money from the public long term, right? And a lot of times you find that a lot of these bonds are usually foreign currency denominated because they want to open into a global market. If they want to borrow something locally, they'll probably do a commercial paper. So when it comes to a more long-term bond and they want to open into a global market, it is foreign currency denominated. The same thing with the government bond. It is foreign currency denominated, but there are local currency denominated bonds. For instance, in Nigeria, we have the FGN bond, which is local currency denominated, okay? So you can have a local currency denominated bond and a foreign currency denominated bond, right? But they are more long-term in nature than your average money market instruments like your Treasury bills. And also, they are, well, we can consider them maybe more moderate risk in terms of risk, higher than your typical money market instruments, all right? So you want to make all of your decisions based on speaking to a financial advisor and based on your goals, based on your budget, and of course, based on your risk appetite, all right? So if you're thinking about safe investment options, those are the options to consider, right? One is your Treasury bills, second is your fixed deposits, and the third is your money market funds, and bonds, we can break that down to municipal bonds or government bonds, right? 5 options to consider. I will see you in the next video, and don't forget to leave your questions and your comments below and I will respond to them. Bye for now.